Hi everyone, welcome back to our channel. This is the paid mentorship group, and this is lesson number 6. So, just a recap on what we did on the last lesson. So, on the last lesson, I explained that smart money traders or big institutions like your banks, your hedge funds, they use what we call an order block for them to be able to place buy and sell orders at the same time. Then, afterwards, what they do is they fulfill one order. Then, after fulfilling that one order, they come back and take orders for the next one. So they come back and balance the equation. So if you didn't listen to that, if you didn't watch rather that video, please go ahead and do. So this is what they do. They place a sell and a buy at the same time. So sell, buy, right? So they'll place a sell and buy on this order block. So they'll open two positions. They'll open a sell and a buy. So what happens is if they open a sell and buy order, they'll start going down. It depends. They can open a buy sell order or a sell buy order. In this case, let's only focus on sell buy order. Then just know that the opposite is also true. So the market will go down because now they need to fulfill their sell orders, right? So they'll give you some sort of a beautiful trend line going down. And as they give you this beautiful trend line, remember that we have traders, small traders, me and you, who do not even move the market. So what we'll do is we'll see a trend line, and we'll see a perfect trend line, and we'll say, you know what, the market is going down, so we'll pile up our orders, right? So we'll also join in this buy and sell in the sell order, right? So the institutions, which are the big traders, will then make something like they'll then have a target. I don't like to call it a take profit, but for them it's a target. This is where they want to go. So they'll have a target. Then immediately they've reached that target, they'll start reversing their orders, right? So you'll see a sharp move going back into you'll see, okay, sorry about that. You see a sharp move going back into where they took the first initial order. So they'll have something like this, right? So they'll have something like this, a sharp order going back, and you'll see maybe a wick, some sort of a wick, just touching that point where they started. Then you'll see the market continuing to go down as they initially proposed the move, right? So in this whole thing they do, they just collecting liquidity. Now I like to define liquidity as money being generated in the business, because remember, forex is a business. If people didn't lose in forex, let's say everyone won in forex, that means this institution, if I can per se call it like that, will be broke, meaning someone has to lose in order for someone to win. So in blue league markets, we've discovered a way to trade like the big banks, follow the big banks, follow the big money, rather than trading like the retail traders, as we like to define them, because that's where we see that's where we always get ourselves into. For example, we'll start placing buy orders. We'll start placing buy orders as we continue with the market. Buy orders, when it touches the trend line we buy, when it touches the trend line, or I mean we sell. Touches the trend line we sell, touches the trend line we sell, touches the trend line we sell, touches the trend line we sell. Then all of a sudden the market is going back into its original place. What is it doing there? It's doing what we call mitigation, right? Mitigating itself, mitigation, right? So that's the market doing mitigation. But I've explained all this concept on video number 5, where I talk about how the market makers actually trade. I didn't want to focus on that. I just wanted to do a brief summary. But as videos keep continuing, I'll keep on emphasizing this point on how the market makers trade, because this is very important. Sorry about that. Moving on. So today I want us to focus on order blocks, right? Now, if you can go online in any website where people teach order blocks, they'll always tell you that order blocks is that last candle. So let's say we have this candle. Let me just clone that. So let's say we're having an uptrend. Let me clone that. Let's say we're having a beautiful uptrend going up. Let me just copy and paste. So we're having a beautiful trend line going up, right? So they'll always tell you that an order block is that last candle before the change in the market. So the market was going was having an uptrend, and all of the sudden it changes. It's having a downtrend. So let me change the color. So they'll always tell you that an order block is that candle. Let's see if that one. Right? Let's say we have this scenario. So they'll tell you that an order block is this candle, right? So they'll define this as an order block. Look, I'm not disagreeing with them, but this is not honestly 100% true. And I'll tell you why. So this will be an order block, right? So in the next videos, I'll tell you. So yes, at this point, you can take that as an order block, the last push before the pullback or the last candle which created a move to the opposite side. Take this as an order block, as simple as it can. Just that's an order block. Agree to that. Let's continue. But as we move on, I'll give you types of order blocks. Because now, if you say something like that, that means you'll go around looking for order blocks which are not fulfilled. For example, this can be the order block, but the market did not come back and fulfill it. Now, I want to show you the beauty of order blocks. Order blocks are a powerful strategy. Order blocks are powerful because remember the market makers are using order blocks, but now you need to combine a lot of factors in order for you to understand order blocks. For now, just understand that order blocks is the last push before the change in direction. But for now, I just want to show you one of the trades we took. I think it was early on this year. So it was a very, very beautiful trade. So this trade, the reason we took this trade is because now we combined a lot of factors. I just want to tell you, after explaining to you what are order blocks in layman's terms, I want to explain to you that in order for you to trade smart money successfully, you need to combine a lot of factors because a lot of people they learn other blocks, they jump into the market, they want to make money straight away. It's not like that. You need to understand all these important aspects. You need to combine all these beautiful aspects in order for you to understand how to trade with other blocks. If you don't do that, you'll go around saying this is an order block, last push, and the market will always give you hope, then it will take your stop loss and it will move on, right? So I'm not saying, I earlier on I said that liquidity is generated through retail traders. Guys, liquidity is generated through everyone. The minute you enter the forex market, they want to take your money. They don't want to give you any money because they need to keep the industry going, right? Now, just to explain what's been going on, just to give you a backstory. So the market printed a lower low. I'm gonna explain in the coming video what's a lower low. Then afterwards, it broke structure, created that high, but in order for it to confirm that high, it had to just take out inducement. After taking out inducement, mitigate itself in some sort of an order block, right? So there was an order block here if you go to lower time frame, right? So it took out inducement and it mitigated them. Then it went up. As it went up, it took out that high. It took out that high, meaning it had a break of structure somewhere there. In fact, this is the high. It happened there. Then that high was taken out, and it was excuse me, it was taken out after inducement was taken out, so we can successfully confirm that is this is a lower low. It's a perfect lower low because after taking out inducement it went out and it broke structure, which is your POS. Then afterwards the market continued up, it printed a high. Now in order for it to confirm that high, it had to take an inducement. But guys, when I go here, I don't see any strong inducement. Now remember, you don't know what inducement is now. I'll explain it as time goes. We still have a lot to learn, right? But just know that it didn't give any perfect inducement, right? So when the market went down, we took this as inducement, right? So we're gonna take that line as inducement because it's the only perfect pullback after the market broke structure. So this will be our inducement. Now remember guys, the mark now okay, let me first name that. This will be inducement up. Now remember guys, in order for the market to successfully break a structure, it needs to take out inducement, right? Was that inducement taken out? No, it came down, it printed that inducement, it went up, it printed this huge candle, right? It's a 4-hour candle, it's beautiful, it's huge. But now, can we successfully say this is a break of structure? No, guys, we cannot say this is break of structure because the minute we say this is break of structure up, we're fooling ourselves. This inducement was not taken now, so that can be not be break of structure. Now, if you did say that this is break of structure, you are going to say this is your order block. Now, look at this, right? You're going to say this is your order block. Now, what are you going to do? You are going to Now, what were you going to do? I'm sorry if my voice is a bit different. I had to change locations. Yes. Now, what were you going to do? You're going to place an order here, and say this is your buy. Now, what's the problem? It was going to react perfectly for few days. I think this is a day because these are 4-hour candles. Then the next thing, one of these candles were going to take you out. Then you're going to say that smart money doesn't work. Smart money works, but then you need to have a perfect break of structure, and you need to have a perfect change of structure if you have a change of structure, right? So this is a fake break of structure, right? Let me see if I have a fake break of structure here. Yes, I'm going to create a line which outlines a fake break of structure because we need to be aware of this. We need to be aware that the market is now fooling us, right? So as the market went up and it created this big candles, a lot of people were going to say, "Oh, this is a perfect order block." That's not an order block. This is a fake POI, right? So in my list, I do have a fake POI. So I know for a fact that the market will react to this POI, but it will not um order block fake. Yes, the market is going to react to that order block, but it's not the correct order block, right? So I'm not willing to place any orders there. In fact, I'm willing to let the market go out, right? Go down. As you can see, the market then created what I like to call a trend line liquidity, right? So it created some sort of a perfect touches. Now if you see something like this, you know that the market is now starting to fool people into thinking that you know the trend lines are working and all like that, because if you can see, it's also here, right? So we have engineer, we have yes, we have a trend line. So now remember, guys, the market has been creating this for a long time. It's been engineering this, so it's going to have a very big move. Now remember, where did the move start? The move started here. We want the market to come respect this order block because it didn't break structure. So the only order block which is outstanding is this order block, right? So this is the order block we're waiting for to be touched, because now the market came here, it broke structure, but it didn't have any inducement. The only inducement it printed is this inducement. So we're waiting for the market to come break this inducement. After breaking it, we're hoping that the market mitigates, meaning it comes and takes its orders here. So just to give you a clear indication, this is where the buy and sell orders happen. So this is where the market um did a buy, sell, sell, right? So waiting for the market to come back there. Now, someone would ask me, so what do we do as the market is doing all this? We become patient. We wait for our chance to kill the market perfectly. Now remember, forex is 10% taking trades and 80 and 90% waiting, being patient and all that, right? Now, as it created this liquidity, it gave us more reasons to wait for it, because now we knew we have a fake POI, we have this perfect trend line liquidity being created. Then another thing which it printed, which is perfect, it gave us engineered liquidity, because it came and broke that inducement, but then it didn't close below it. Meaning, what did it do? It created a engineered liquidity. So our inducement turned into engineered liquidity, which is perfect. It's more reasons why we should wait for it. So now we have what we call engineered liquidity. So this is inducement and it's also engineered liquidity. So now if you have a 5,000 rands account. Now, since this is happening, we know that any other block closer to this, any other block down to that, it's perfect. Now we're waiting for the market to take them. So we can either go to a lower time frame to take this trade, or we can take it anyhow. We can just place a buy order there, and our stop loss should be below, few pips below our other block. But that's not really how we trade. I'm just summarizing here on how we actually do this, right? But we're gonna show you how we perfectly trade this, right? So someone would ask me, so okay, we've done all this, we've waited all these days. What's the take profit, right? So the take profit, it's simple, guys. For the take profit, we just target the printed higher high, right? So now, since this inducement is taken out, we are now confident that our new higher high is this. So this becomes our fake higher high. So our new higher high is that. So now would expect the market to come and take that higher high, right? So look at this. You've waited for days to eat for months on, right? So now this is the beauty of order blocks, guys. Imagine how many 4-hour candles are this. And imagine that your candle did not even have a drawdown. It just came in, it took your orders and it flew with it. But now, guys, in order to understand smart money, you have to listen to what we're going to say in this course. Each and everything. We're going to explain imbalances. We're going to explain liquidity. We're going to explain fair value gap, which is the same as imbalances. We're going to do multiple time frame analysis. We're going to go like, guys, we're going to explain every single thing slowly. There's no need to rush. We need to understand this, right? So now that's the beauty of order blocks. You need to understand this. You need to understand all that I've explained here and why the market came there. It was doing what we call mitigation, but it mitigated after how many days? Imagine if you became patient, you did not blow your account, you waited for this big move. This to there was gonna make you a millionaire over few days, right? So guys, you can start trading from January to December, but it only takes 2 or 3 trades for you to buy that dream car, to buy that dream house. So please be patient, allow us to teach, and let's kill the market. This is Blue League signing out.